Hey, what's up guys, John here. What BlackRock, Blackstone, Fortress, and Goldman Sachs are doing right now says everything about the future of the United States economy. These entities control tens of trillions of dollars either directly or indirectly through their subsidiaries and their partners.
BlackRock is a financial giant. It's the largest investor on planet Earth with over $9 trillion in assets.
What is happening right now behind the scenes is absolutely shocking. So Fortress and Goldman Sachs, they're going to be buying residential home loans throughout America. BlackRock is buying distressed assets from banks, distressed loans, and Blackstone just raised the biggest real estate fund in world history. Over $60 billion of dry powder is sitting at Blackstone.
Blackstone in particular raising money at this time, the largest ever $30.4 billion drawdown fund in real estate, gives them the opportunity to really capitalize.
I'm going to break this down and show you exactly what's coming. And this is all unfolding as Fannie Mae is working to deploy $3 trillion into the residential real estate market throughout America. Things are about to really heat up. Please hit the like button. Hit the like button. People share the content. Educate more people about what's really happening in our real estate market. Take a look at this. In July, a report on the fall of Denver and the fall of Ohio, 2 months before the media. In 2023, I predicted federal rent control would come and food price controls would come to combat inflation. The White House is now working to make both of these laws.
Passed the first ever federal ban on price gauging on food.
My incredible team provides tomorrow's news today. Only 30% of all viewers are subscribed. If you subscribe, the algorithm will reward the channel and we can expand and grow and hire more researchers. Thank you for simply clicking the red button to subscribe to the channel. Now on to the video. Fortress, Goldman Sachs enter the REIT game. Commercial mortgage borrowing and lending expected to jump 26%. With commercial owners expected to start refinancing properties as borrowing costs ease, a few major players are looking to capitalize on real estate investment trusts. Goldman Sachs and Fortress Group are among those launching REITs to seize the changing debt environment, according to Bloomberg. As banks have been pulling back commercial real estate lending nationwide, investment firms are stepping in. Fortress filed plans with regulators for a non-traded REIT geared towards financing loans across sectors including hospitality, multifamily, industrial. Fortress is aiming to recruit individual investors in the vehicle, right? Fortress plans to originate and acquire senior secured floating rate loans. According to its filing, it also wants to make inroads into residential debt, such as property tax liens, single family rental loans, and jumbo mortgages. So that's a big deal. $3 trillion could be injected into the U.S. economy without any federal spending. So if they're buying residential loans and they are now, Fannie Mae is going to be launching a $3 trillion pool going directly for residential properties. Could you imagine they launched this and then you have BlackRock and Fortress and Goldman and all these major players buying it directly from them? And then the moment someone misses a payment or any type of provision changes inside of their loan, they could foreclose. It says a $3 trillion could be injected in the U.S. housing market without any federal spending by tweaking this corner of the mortgage market. And they say they're going to start with $1 trillion. So letting Freddie Mac do this for home equity loans could start putting $1 trillion into consumers' wallets basically now, and $2 trillion by the autumn. If fellow mortgage giants Fannie Mae, Ginnie Mac follow along, the potential stimulus could top $3 trillion. Their involvement in home equity loans would come as banks have slashed their participation following the financial crisis. Home equity loans outstanding have plunged to $350 billion today, from more than $700 billion in 2007, just before the financial crisis, according to Whitney, and that even as home prices have shot up 70% in that span. So look at what BlackRock is doing. BlackRock sees huge opportunity in cast-off banking assets. BlackRock is poised to become the biggest buyer of assets that banks unload to improve their capital and liquidity after concluding that the industry faces years of upheaval brought on by high interest rates, stringent new regulations, and possible consolidation. Gary Sheldon, a vice president of the world's biggest money manager, is leading efforts to position BlackRock's funds as sources of capital for banks looking to sell asset-backed securities or large portfolios of consumer, commercial, and residential loans. So you got BlackRock buying residential loans, Goldman, Fortress buying residential loans. There is no shortage of supply. Lenders are offering assets every day to potential buyers like Blackrock, and the pace of big loan sales is ramping up. Mr. Sheldon said in an interview, the shifts are part of a long-term secular trend that will see private capital playing a larger role in support of lenders, he said. It's a huge opportunity for Blackrock. It's a huge opportunity for our clients. The firm's former chief financial officer and previously a financial institution banker at Morgan Stanley. As part of the plan, BlackRock could start new investment vehicles that target bank assets, he said. BlackRock will join an increasingly crowded field. Private equity and credit managers have been angling to buy dislocated assets from banks, and some of the country's largest alternative asset managers tried to get into the U.S. government process to auction off lenders, and 4 of them collapsed earlier this year. So you have these major players doing this, and then you have Blackstone. They're deploying, they already raised a $30+ billion fund, but they have $65 billion just dry powder, cash. And they say that they're going to get aggressive. They're on the offense. It says what we see ahead is an unparalleled opportunity to deploy more than $65 billion of dry powder into a dislocated environment. This is according to the new head of Global Co-Head of Real Estate earlier this month. At times like this, we believe Blackstone's real estate really does its best to work long-term view and not getting distracted by short-term noise and volatility. He was promoted by the Global Co-Head role after his former co-head, Glenn Kaplan, was elevated to the newly created role of Global Co-Chief Investment Officer alongside former head of European Private Credit, Lionel Asset. Now, what they're saying here is they're going to be targeting essentially travel. So look at this. Here, rates have come in on the back of lower inflation. The bid-ask spread is beginning to narrow both in the private and the public markets, and financing markets are also beginning to heal. Commercial mortgage-backed security activity has recently picked up and spreads are beginning to tighten. I think that creates the condition for us to be very active deployment perspective in the U.S. in 2024. From an asset perspective, global logistics remains Blackstone's single biggest exposure, making up more than 40% of global real estate footprint. In the last 12 months, the firm has committed $15 billion in new ground-up developments in the U.S. Data centers as a sector the company considers in the early innings. The growth in the cloud and more recently artificial intelligence mean there's an extraordinary tailwinds. So you have also global travel, tourism, hospitality, another focus for Blackstone. And then also there's another article saying entry-level single-family homes. So they're going to be just like they founded Invitation Homes in 2009 and 10. They purchased over 80,000 single-family houses. So there's a really big push coming for all aspects of real estate. In addition to them, they also have KKR, Henry Kravis's firm. This firm is, I would say, one of the major players that essentially built private equity. They've had so many major deals in the early 80s and 90s, which they essentially changed the way in which businesses were round up and sold. They did the Nabisco deal. They had all these major deals back in the 80s and 90s, which basically changed the entire landscape of our economy today. It was KKR, it was Blackstone, it was a lot of these companies that basically worked alongside one another to change everything about how businesses are bought, sold, consolidated, the entire M&A business. It says rising interest rates have taken their toll on U.S. multifamily housing as they have on other commercial real estate sectors. Debt levels relative to equity are higher in multifamily than in some other segments. A loan maturity wall loom and interest rates caps are expiring, putting many owners in the position of refinancing at a time when their properties are worth less than the acquisition basis and interest rates are much higher, plus a wave of new supply will come on the market over the next 2 years. Some have wondered whether multifamily housing is in for a period of significant defaults and distressed deals flow similar to that of the office sector. They're getting ready for this entire wave that's coming. And don't forget, it's been reported that institutional investors will own 40% of single-family rental homes in the next 5 years. And it's not just Medium.com saying it. You have Yahoo Finance saying this. You have I mean, even CNBC has articles talking about this. This is a major, major shift that's unfolding. Institutional investors may control 40%, right? CNBC. So you think about it, how would they control 40%? They have about 5% now. They'd have to, 8x their holdings. Well, it would likely be by buying liens on properties, buying distressed portfolios from banks, banks that are going under. Don't forget the Bank Term Funding Program, which lent $165 billion to 1,804 banks. They have to pay back this money by March 10th, 2025. If they can't pay back the money, they're going to be consolidating. And if they're going to consolidate, who are they going to be selling off their assets to? Fortress, Morgan Stanley, Blackrock, Blackstone, KKR, the big players. That's essentially what's going to be happening. So if you are thinking about investing, follow smart money. Look what they're doing. They're hoarding cash right now. They're getting ready. And I think that if you're sitting on a mountain of cash, even a small mountain of cash, 50 grand, 100 grand, you could probably buy a really, really good deal in the next 6 to 12 months. Make sure you're not going to overextend yourself. I think a lot of people are overextended. So if you can, buy a really good asset and you can hold through a storm, I think you're going to thank yourself later, and I think your family will thank you as well. I mean, what do you think about this entire situation? What are the odds that the smartest guys in the room, the smart money, they're all doing the same exact thing? What are the odds that they're wrong? I think very, very slim. Let's talk about this below. If you'd like to fix your credit to position yourself for funding, maybe you're thinking about buying a house, a distressed rental property, we would love to help you. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative or derogatory items in your credit report, go to greatcreditfast.com. Click the link in the description just below this video. Schedule a free call for Monday. Catch you next video.